Hi everybody, this is Gary Dean and this is our nightly video report for Wednesday, March 16th, 2016. I'm actually getting this out about 9 minutes before the market closes. I actually have to run out. But I really am not anticipating any big drops, or they may try to push it up the last minute like they've done, each time. But one thing I want to say is, after we get these big moves like this, and when I say, upside is going to be, a little more difficult, what I mean is this, is that we topped out here at 2008. From here, we had a decent little drop, then we rallied up. And, from where it was, is only a 12-point difference. So that's what I mean. This was pretty much straight up, straight up, straight up. And what happens, though, is that once it starts running out of steam, these moves get, over the previous highs to become less and less. So, we got the pump up today, and, from where we were on the previous highs is a 3-point difference. Or, a little bit more than that. This high was 24, 8-point difference. But notice the rising wedge right here. We're at the top of it. I don't know how long these bearish divergences can continue to reset, but it doesn't make, even though this market has been going up and up, it doesn't make the long side any safer. And now you have the Fed news away. So what do the bulls have to to really that uncertainty to the bears? And the reason why I'm saying that is when we had the ECB, they ran it into the ECB announcement. From there, we had the big drop, and then they spiked it up. So they were able to keep it up here because the uncertainty with the Fed, and now that's gone. So what is the next, piece of information that they're going to be able to hold off, people shorting or taking profits? Because there's really none left. I mean, if you just look at what the Fed said about the economy, they lowered GDP, stuff like that. So, now we're back to the uncertainty from the bearish side of things, with bearish divergences as well as a bearish rising wedge here. Now, does it mean that they can't, make it up to here before finally turning? Absolutely not. They've been pretty resilient. So I think that really the main thing is we have to see some momentum pick up on the downside. But now, if we just look at it, if you notice, I've been, saying where the trigger lines were that the bears needed to get through to get some momentum going. And right now, it's all the way up to the 2003. And if they break through it, they're going to break through this wedge. But they already broke through this before. I think this was your short covering rally. And from there, there's, we're going to get the hiccup. But until we see any price traction to the downside, the bulls are in control. So we're at the top of the wedge, bearish divergences. We've had no breaks, blah blah blah. I've been saying that for a while. On a 15-minute chart, just a 23% retracement brings it down to 1980. That means we broke through this rising wedge, and that was from the 60-minute chart. And then from there we have the the previous lows at the 1969. So just a bare minimum retracement, is breaking technical patterns here. And again, we have the bearish divergences. This Fed meeting, we're surprised that she didn't do anything, which is really ridiculous. Everybody knew she wasn't. Gave us a little spike, but now we're getting overbought again. And if we look at the weekly of the Dow here, it made it through this moving average here, but pulling back a little bit. But then we have this resistance that's right above as well. So the bulls are not out of the woods, even though people are getting very complacent with what's going on with this market because we haven't had any pullbacks. And if we just look at what the S&P has done, that made it right up to this resistance line right here, and that's what so far has caused a pullback. So as much as the price has been controlled by the bulls, there's really a lot of reasons to be very, very careful about this move, because people are starting to get that very complacent attitude, and they're starting to look for their 10-12% gains for the year. Once you start hearing that stuff, because nothing's really changed as far as the overall dynamics of the market, until the bulls can push it above these previous highs, it's still a downtrend, and that's just the way things are. So again, I'm not really happy with all this, but I'm looking at the the overall things and believe that once it does roll over, this market's going to be a lot lower than where it is right now, and I'm just not 100% sure exactly when it turns, but it could turn any time here and make perfect sense. So with that, enjoy the rest of your night, and I'll talk to you guys tomorrow.